Then they hit a level where they're like, I just need to get in. And we usually see it happen in waves. The stock market participants are like a school of fish. And so we saw that about a week and a half ago. And then the stock market sold off and took a little bit of a nosedive. And that, when we look at the daily chart, you can see that right over here. So the 30-minute chart allows us to zoom in on the near term price action and the sentiment within the markets. Now, we did see the market go in this oversold condition, and the market is naturally always going from overbought with FOMO, people piling in at a high, to a sell-off that creates an oversold and they panic out. And so from that panic low, the market has moved up and we're hitting all-time highs again. And just knowing the sentiment is very important. And so right now, to answer your question, stocks continue to just tread higher. They continue to rally. NASDAQ at all-time highs again today. And the market is moving, just the way it should be. Just waves of fear of missing out and then buying. And right now we're seeing kind of money move into pretty much all assets. We're in what I think is kind of a little bit of a euphoric phase here in the stock market, especially in the precious metal space. And when we see everything piling in,
many analysts believe gold's rise to record highs marks the start of a long-term structural change in global markets. Some traders think the metal is technically overextended, but a closer look shows strong fundamentals behind the rally. A strong foundation is forming beneath important resistance levels, according to chart patterns, a setup that usually precedes a strong leg upward, not a speculative blow-off. Significant inflows into mining shares and futures volume indicate institutional interest. Many market participants now see this as a long-term reevaluation of gold's role in the global financial system, not a price hike. Market strategist Chris Vermeulen underlines that investor emotion, not technical strength, drives this momentum. He defines confidence migration as a steady shift from debt-based assets and fiat currencies to gold and silver. Real assets are becoming more important to investors as national debt, currency debasement, and geopolitical instability undermine conventional financial systems. According to Vermeulen, this phase marks the early start of a precious metals bull market. He believes corrections are constructive reevaluations that allow the market to stabilize before regaining. Silver has shown resiliency like gold, but with a more dynamic upside and greater volatility. Industrial demand, monetary hedge appeal, and long-term technical setup suggest a breakout. Silver has benefited from the real asset transformation because to its constrained supply chain and rising investment demand. Vermeulen emphasizes that silver's trajectory is driven by structural reasons, not speculative interest. Vermeulen's latest gold and silver study highlights are presented here. To never miss an important market update, subscribe to our channel and turn on the notification bell. Let's proceed. Hope you enjoy the video and thanks for helping.
charts, there's a lot going on. There's a lot of layers here, and it could be difficult for some people to grasp all the layers that I kind of put on here. But when we look at the S&P 500, which is threatening new all-time highs here on the daily chart, which is on the right, the market just is going through this perfect wave right now where we're in a bullish environment. If we were to look at our 30-minute chart, like this is what I really like is the short-term charts tell us when we have specific setups in the market, David, for short-term emotions. And so when we look at the short-term perspective, we have the stock market giving us this FOMO indicator. When people hit a certain threshold where a market has moved too far to the upside and they're not on board, then they hit a level where they're like, I just need to get in. And we usually see it happen in waves. The stock market participants are like a school of fish. And so we saw that about a week and a half ago. And then the stock market sold off and took a little bit of a nosedive. And that, when we look at the daily chart, you can see that right over here. So the 30-minute chart allows us to zoom in on the near-term price action and the sentiment within the markets. Now, we did see the market go in this oversold condition, and the market is naturally always going from overbought with FOMO, people piling in at a high, to a sell-off that creates an oversold and they panic out. And so from that panic low, the market has moved up and we're hitting all-time highs again. And just knowing the sentiment is very important. And so right now, to answer your question, stocks continue to just tread higher. They continue to rally. NASDAQ at all-time highs again today. And the market is moving, just the way it should be. It just waves of fear of missing out and then buying. And right now we're seeing kind of money move into pretty much all assets. We're in what I think is kind of a little bit of a euphoric phase here in the stock market, especially in the precious metal space. And when we see everything piling in, it can warn obviously of some big trend reversal coming to an end. Because I was talking to a subscriber the other day, and actually a few of them, and they all said every single one of their gold mining ETFs or sorry, stocks are up over 100%. And of course, we're long equities, we're long gold. And the fact that everybody is cleaning up in the space, it feels like easy money. When everybody's making a ton of money, you got to be cautious. It's when you need to like take the blinders off and start wondering, when will this take a bit of a pause or breather? And so that's what people need to be aware of. And I think the best comparison, which we can touch on if you want later, is a comparison with 2007. And I layer on a couple extra charts here that signal that we are really, really close to a capitulation high, kind of a blow off top in the precious metals, in the mining space in general. And usually that signals the end for the stock market. So that's one thing we need to be aware of. But until then, you got to ride this market higher. The thing is, it doesn't really matter if it does or not. You got to stick with the trend. But my belief is what's going on with major cycles, like there's a whole bunch of different things at play that we can layer in here. I think one of them is, as you touched on with the opening paragraph, the whole AI bubble. And I think a good way to look at this, there's a few layers. So I think the stock market phase is kind of right in this blow off peak phase, or the stage 3 topping phase. And that is usually when we're in that phase, when everybody's making money and everybody's accounts are at all-time highs and money's piling into small and micro cap stocks like they are right now. It's kind of a euphoric phase. Everybody feels pretty darn good, like they know what they're doing. And you're a genius, right? Everybody's who held on to stocks forever are finally getting paid off. So I'm worried we're coming into this phase. And if we kind of scroll down, as you and I have touched on, precious metals tend to perform exceptionally well just as the stock market comes to a top. And I'll show you an interesting comparison in 2007. But this ties back to your AI opening comment there, is we've got this AI bubble potentially coming to an end. And what happens in the economy, in the economic cycle, this yellow cycle, which the stock market cycle is in the background, just as the stock market is topping, there's usually some new innovation. We had the big tech bubble back in 2000. It kind of blew up. We have the new innovation right now is everyone's piling into AI, or they have been. And the question is that bubble coming to an end? And so, the innovation this time around happens to be in some of the largest tech companies, which drag the indices higher. And so this is where I think we are, is we've had records amount, trillions of money pile into infrastructure for AI. You look at the amount of pitch decks for AI businesses. There was a report on it. It makes every other bubble look like chump change. They don't even look like bubbles compared to the AI of money just chasing AI. So I think your comment there, are we into a bubble phase? Some experts in the field says so much money is being spent on AI infrastructure and everything that there's not going to be profits for a long time. It's just out of whack. And so this is kind of one of the reasons why I think we're getting closer to a major top. And it's not like your 2017. And the comparison of 2007, this is what to me kind of really seals the deal in terms of where we're at. The left chart here, the stock chart in the background, is the S&P 500, and it hit all-time highs in 2007, just before it went off a cliff and sold off 55%. Now, the yellow line is gold, and you and I have covered this. Gold has outperformed. It's on fire, telling us something big and bad is about to happen. People move to physical metals, and it outperforms when they're worried about currencies and economy and all of that stuff. Now, if we were to take a look at where we are now on the right-hand side, stock market's at all-time highs. Gold is outperforming. It's telling us something big and bad is about to happen. And in 2007, we had the US dollar, which is the green line. Most hated. Everybody thought it was going to collapse. If we look where we are now, we've got the dollar down low. Nobody likes it. They think it's going to collapse. You and I have covered this. Now, the interesting part on these is if we layer in what happens just as the stock market is about to top out, and what happens with gold miners and platinum miners. So the middle chart here is GDX, and the bottom chart is platinum. And they have just started to really skyrocket and start to take off to the upside. And as the stock market starts to stall out, which is where I think we're very close to being, gold, silver, platinum, palladium miners, they continue to rocket higher temporarily while the stock market tops out. And so this is like the last kind of wave where the stock market is close to falling out of favor. Gold's going to continue higher. Miners and other metals are going to continue higher. And then, of course, the stock market eventually will collapse and it'll want to pull gold down and everything with it. So if we were to look at where we are today, we have gold miners have now done that same thing, that rocket ship kind of move where they've taken, dominance and outperforming. We have platinum. It's done the same with palladium. We're seeing base metal miners, anything in the miner space, copper miners, base metal miners, just throw the word mining in it and money is flowing into all of those. And they've just taken off as the leveraged play. So this is telling us there's still much more upside, I think, in the precious metal space, but it's also telling us the end is near when the music is good and everybody's making lots of money and it's easy every day, it's more and more money. That's when you just need to also be mentally preparing yourself for when this runs out, because when it reverses, we tend to see some big reversals in the market, and you can give back a lot of those gains and potentially not have any growth for years after that.
The resurgence of retail investors, the swift increase in platinum and palladium prices, and the surge in ETF inflows are indicative of a euphoric period in the enthusiasm for precious metals. This ambiance is strikingly identical to the final stretch of the 2007 and 2008 cycle, during which widespread enthusiasm transformed metals into a speculative hotspot. The current speculative energy that is coursing through the sector is underscored by the rapid recovery of palladium and the breakout of platinum from its long-term base. However, as Christopher Muan observes, this is the precise moment at which discipline becomes indispensable. It is crucial to enable markets to breathe through natural corrections in order to develop lasting strength, rather than pursuing short-term spikes. Healthy resets, sentiment lowering, and the establishment of a more solid foundation for the subsequent sustained uptrend are all facilitated by temporary pullbacks. The long-term outlook for precious metals is decidedly bullish. Capital continues to migrate from paper instruments to tangible stores of value, reinforcing the metal's position at the core of a shifting monetary system. This is due to the eroding public confidence in central banks, the weakening of currencies, and the mounting global debt. The stage is set for a structural repricing of gold and silver. The next expansion phase has the potential to propel gold beyond $5,000 and silver well beyond $80, as indicated by technical indicators, capital flows, and historical precedents. The journey will be characterized by pauses and corrections, but the overarching trajectory is unmistakably pointing toward a new era, one that is characterized by the progressive unwinding of decades of financial excess and the return of real value.
There's a lot of price action going on. It's pretty exciting. I mean, we're in. If you look at the chart that I have, I'm kind of showing from the lows to the highs back in the 70s to 80s based on percentage moves from those levels, and you can see we're actually not too close to the same percentages. We still have quite a ways to potentially go. But when you look at the price action, the curves on the chart, usually when things start to really go parabolic and start to go straight up, like the last few bars, those are usually the ones you need to be aware of. When it feels so easy and every day it just opens higher and higher, no matter what, that's usually a bit of a red sign. And I think, if we look at GDX, the miners, this is a really good example. Just look at the last three bars. It's just popped and gone parabolic. And same with silver miners, pretty much every miner, in fact, they're going straight up. And this is as exciting as it is. The crappy part is people get into like the precious metal space and they hold on to trades for like a decade or so, and it doesn't do anything. And then suddenly, like 3 months, the rally happens. And this is where a lot of people get caught, is they've waited so long and it goes up so fast. It feels great. It looks great. Your account recovers. But people think, well, I'm going to ride this. This is just the beginning. But keep in mind, you go look at these rallies, they're all like 4 or 5 months long, and then they're dead.
That's right.
So
and then that's why the metal has a perception of being stable, because after it's rallied, it falls and then it stays flat for 15 years. And
Yeah,
so people,
but it holds a lot more value. Like the metals hold up. Well, at
yeah.
least gold holds up better, where miners can crash back down. So this is the problem. People have been in the mining space for 10 years or so waiting for this, and then it happens in 3 months, and they think it's just getting started. But there's a lot of signs here saying that actually this run could actually be coming to an end, and we might go into a big pause. Maybe it won't sell off huge, but maybe it'll trade sideways for 6, 8 months, or maybe it'll pull back 20, 30, 40% if the market does go into a recession, just like it did back in pretty much every other pullback in the market. So people just need to be aware that, just because it's had, it's starting to rally and it's happened so fast doesn't mean it's not going to last for years. You generally aren't going to see the prices run up when you see this type of price action.
But yeah, this is what's going on right now.
And this is like, I mean, I'm in this space. I communicate with thousands of investors, especially in the precious metal space every week, and you can cut the air with a knife. If you don't hold physical metals or you're not in miners, you feel left behind. And that is it. People are literally just going to Costco and buying metals. They're probably, going to the Canada Post, the post office here sells metals. I mean, they're sold out. I'm surprised I haven't heard an ad on TV. We buy your used jewelry, because that's what happened at the last peak. But this peak has happened so fast, I think, or this rally. It just, the ads and the people promoting gold haven't caught up yet, because it's only like, really 2 months in. So I think we're very close to seeing price continue to rally here, but we're about to probably start seeing it headline news like absolutely everywhere about, buy gold on your credit card and sell your jewelry and all that stuff. And that's going to be a real red flag, because that's usually the last people piling in and all that stuff.
What's the market top indicator for you?
Well, generally it still comes down to price. You still need price to reverse. And usually that requires, in this type of price action, unfortunately, it requires a huge red bar. It usually requires either a huge gap higher on an opening of a bar and a huge sell-off, or it requires price to run way up and then close way down at the lower end of the candle, showing that it got bought up, but then sellers slammed it and sold it off. So we need some type of reversal candle. And to me, it'll be on this type of chart that we're looking at now, which is the monthly chart. So this is the problem. A lot of people always want to buy at the lows, pick a bottom, and then they also want to sell at the top. The reality is, if you manage positions and risk,
a complete redefinition of global wealth and monetary power could occur in the coming years if current trends persist. Precious metals, which were previously regarded as vestiges of an antiquated system, may soon become the bedrock of a new economic order that is founded on tangible value rather than inflated promises. As digital currencies and fiat systems continue to lose public trust, investors and nations may return to real assets as a means of ensuring stability in trade and finance. The gradual shift of gold accumulation toward Eastern economies indicates that global influence is already shifting toward regions that prioritize real assets over debt-based instruments. Although this transformation will not occur immediately, the indicators are becoming increasingly difficult to disregard. It appears that the financial world is on the brink of a tipping point, at which point artificial liquidity and paper-backed leverage will be unable to support growth. In this context, gold and silver are likely to be revalued as the genuine benchmarks of value in a fractured global economy, rather than merely as secure havens. Do you believe that the future of money will be reliant on tangible assets such as gold and silver? Alternatively, will digital currencies assume complete authority over the financial system? Please express your opinions in the comment section below. If you find this video to be informative, please consider supporting our channel and activating notifications to remain informed about our most recent content. I will see you in the video that follows.